All right. Good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of Turbocharge Your Options Performance. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics, along with Josh Mindlin, Director of Client Success here at Chaikin Analytics. Now, as a reminder, this webinar is being recorded, and a copy will be sent to everyone who has registered. Please submit your questions throughout the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, Marc and Josh are here to tell us about Marc's latest contribution to the financial industry, the Chaikin Power Gauge Rating, a proven 20-factor model that uniquely combines fundamentals and technicals. To get us started, here's Marc Chaikin.
Thank you, Joe, and welcome everybody. With interest rates so low, many of you have asked us to do a webinar on generating income using options with covered calls and buy-right strategies. And on today's webinar, I'm joined by Josh Mindlin, who, as Joe Bacella told you, is part of our client success team. But Joe joined Chaikin Analytics a little over a year ago with a background in options trading and options strategies, having come to us from Online Trading Academy, where he worked with professional options traders, traded himself, and then taught traders how to use options in a variety of ways. Josh is going to share with you a very disciplined methodology for finding income-oriented option strategies, because just as in trading options on a speculative basis, you do need a plan in order to generate income with option strategies. So without further ado, I'd like to introduce my associate, Josh Mindlin.
Thank you, Marc. It's a pleasure to be with you here today. It's a pleasure to be on this webinar with Marc and my colleague, Joe. I'm excited to talk to everybody today. Let's get into it. I appreciate everybody's time. We're going to go for about an hour. We got a lot to cover, so let's get started. We're going to start today. We're going to focus on some things that we want to learn today. We're going to talk about maximizing your options performance, how to pinpoint ideal entry and exit points, signs that the stock is breaking down so you know when to get out, and how to focus on what's important in a stock prices movement. So if these are things that you'd like to learn, if these sound like things you'd like to learn, please type in, let us know, say yes. We want to make this as interactive as possible as well. So those are the things we're going to talk about today. Now, why learn them from me? Well, as Marc said, I have extensive experience trading and training people. The people that I've taught, very successful, following a set strategy, a rules-based system, a disciplined way of going about being successful in the market. I've been mentored, I've been blessed to be mentored and coached by former fund managers and floor traders, including Marc. I get to work with Marc. It's wonderful to be able to learn from Marc and absorb all of his knowledge that he has. So that's a little bit about me. Let's get into what we want to imagine our year looking like. So I want you to picture turbocharging your options performance. Imagine if you could generate more profitable trades. What would it look like if you took one of the losers and made it a winner? One of your losing trades and turned it into a winner. Imagine if you could optimize your strikes and expirations, balance that risk reward so you're never risking too much. Big risks are bad. So we want to learn how to balance that risk reward and dramatically improve your timing. What if you got in a little bit lower and got out a little bit higher up and were able to get more profit out of it? Imagine you could do this consistently. What would that mean to you? I think everybody here is capable of doing all of this. Everybody who's listening to me right now is capable of achieving these things with the right tools. Probably thinking, that easy, why wouldn't everybody just do it? Well, some people run into problems. These are some of the common ones that I've helped people overcome. The good news is none of these problems are things that you can't solve. Everybody here can solve these problems. If you've had any of these problems, type in. These are some common ones. Not having a set strategy, a repeatable strategy. That leads to uncertainty, making emotional decisions in the moment. Not having a repeatable strategy can be really tough. You don't know what works and what doesn't and why. And oftentimes I find that it leads to not having the confidence to pull the trigger when you should. A lot of people don't have a great sense of direction. They're firing from the hip. They don't know which way it's going. So we want to get you into trades where you have a directional edge, and we'll talk a little bit more about that later. And not sure when to get in and when to get out. That's a common thing that I talk to people about on the phone often when I'm doing my one-on-one conversations with folks here at Chaikin Analytics. Has this ever happened to you? You ever gotten into a trade and you watched it go up and you're thinking, great, just a few more percent, then I'll get out, only to watch it go down against you? That's something that I find people do. Sometimes it goes sideways and they capitulate, they get exhausted, and then it takes off. So understanding when to get in and when to get out is big. Oftentimes I find that adults in the market are a lot like kids at the pool in the summer. They're happy to get in and play and have fun, but when it's time to get out, they never want to get out. They turn to prunes in that pool. So we want to teach you and help you understand and help you develop a system for yourself so that you can get out at the right time. And information overload, I find people, this happens to them a lot. They take in so much and they don't really have a way to sift through the information and get to what's important, what's reliable, and what can really help them. So what we want to do is develop a plan, a process, a way to take in just the information you need, identify that information, and then make decisions in a set, repeatable way. So we're going to talk about how to do that in the next 30 minutes. You're going to discover how you can do that. We're going to focus primarily on covered calls. I love covered calls. I can't really think of a single person out there that shouldn't be doing covered calls. It is a conservative strategy to produce a consistent income. As Mark said, rates are incredibly low. I can't imagine what a CD yields these days. It's got to be rather paltry. But we're going to show you ways that you can generate a consistent return out of the market using covered calls. Let's go over some of my rules here. So as I mentioned earlier, you're going to hear this a couple times from me, and you might want to write these down. All right. You have to have a repeatable strategy. Having a repeatable strategy is key. It helps you make decisions that are unemotional, and it helps you stay consistent. You're able to just do the same things over and over and over again so that you're consistently profitable. You have to have a directional edge. You have to have a way of understanding which way is the market likely to go. Having that edge is a huge benefit to your trading and investing. You have to be able to identify the entry and exit points, when to get in, when to get out, and you have to know what to buy. How do we go about that? We'll show you. So first, let's start with repeatable strategy. I'm going to go through some examples later, and I'll show you exactly how I go through my repeatable strategy, but it starts with finding stocks with the characteristics that I'm looking for. Once I've identified a list of stocks with the characteristics that I like, then I go through a checklist, literally a checklist. Doesn't check off all the boxes. I go through a strategy checklist. If it does, great. And then I find the best ideas out of that list of stocks that I had. Once I've identified those best ideas by going through a checklist, take action, make money. It's easy and repeatable for me, and I have a routine. I do it every week. I'm going to share a little bit with you today about that. Rule number 2, my directional edge. I use the power gauge for my directional edge. I'm going to bring Mark back in on this. Mark, if you would, talk about the directional edge for us, please, the power gauge.
Happy to do that, Josh. In 50 years on Wall Street, I've been successful because I've learned how to combine fundamentals with technicals to find the best stocks and give you what Josh has referred to as a directional edge. I was in charge of the options department of a regional brokerage firm, tens of thousands of options traders, and 95% of them did poorly or lost money because they didn't understand the importance of a directional edge. But for most of us, doing the fundamental research is very time consuming. The technicals are relatively easy. You can get them on your online brokerage platforms. You can go to stockcharts.com. Knowing with a high degree of reliability what the fundamental potential for a stock is hard work. So what we've done is to level the playing field. basically, the Chaikin Power Gauge rating is a 20-factor quantitative model. It's 85% fundamental. It's 15% technical. And in a one-year research project, I basically distilled down everything I had learned from institutional clients, successful money managers in a 40-year career on Wall Street. Started with 200 factors, distilled them down to 20, grouped them into 4 components so you could really understand what it's all about. So the financial metrics are what a Warren Buffett would look at. Those are the value-oriented factors in the model. Earnings and expert opinions reflect another group of market participants, people who are more aggressive, people who are following the trend of earnings and earning surprises. The result is a 20-factor model, which we launched in January of 2011. So we have 6 years of real-time performance. It's really been extraordinary in its ability to identify stocks that are going to outperform or underperform the market. And the reason the model has worked so well is because it's based on how Wall Street works. Institutional investors look at these factors every day to make their investment decisions. Now, they don't all look at each of them. So that's why the model is what I call an eclectic model. It's not religious like a Warren Buffett who only buys value stocks, or Jim Cramer who's interested in earnings momentum. And the proof really is in the performance. This is the performance of the model using the Russell 3000 as a base going back to 1999. The average very bullish stock in the Chaikin Power Gauge rating in the Russell 3000 has been up over 20% a year. And the average very bearish stock has actually been down. Now, in 2016, the average very bullish stock was up 32%. In 2015, where you had a bear market for energy stocks, small cap stocks, the average very bearish stock was down 18%. So the performance has been there, and it's really important because whether you're speculating in options or putting on conservative options income strategies, if you focus on the very bullish stocks, your strategies are going to perform with a much higher success rate. And that's really what Josh is going to be talking about here, how to build a plan, a disciplined methodology around the Chaikin Power Gauge rating and some of the other tools that he's going to talk about right now. So Josh, I'm going to turn it back to you.
Wonderful. Thank you, Mark. Yeah, the performance has been incredible. It's really helpful for me and for all of our subscribers. And you don't have to just take it from us. John Carter, well-known trader, calls it an objective awesome meter for stocks, which is a phrase I really like. An objective awesome meter for stocks. And why is that so important? Why does he feel that way? Well, models beat humans. Humans have emotions and opinions. Models are unemotional, and they do the same thing over and over and over again. They have a repeatable, unemotional system, and that's what you have here. So let's get to my third rule. Timing entries and exits. I have a few indicators I use to help me pinpoint my entries and my exits. Money flow, overbought, oversold, signals, and the volatility bands. And we'll get into some of these a little bit later as well. My fourth rule, know what to buy. And this comes down to having that directional edge again. So as I said before, I use the power gauge rating as my primary tool to give me that directional edge. You saw the results. It helps me understand what is likely to go up and what is likely to go down, what's likely to outperform, and what is likely to underperform. Combine that with relative performance and Chaikin money flow, and you get a really strong directional edge. And that helps me understand what to buy. Rule 4 squared is know what to avoid. Big losses are big portfolio killers, and if you can eliminate those, you have a big leg up already. Professionals on Wall Street are risk managers. They make sure that they are not taking excessive risks and don't take excessive losses. This is the way that I go about it. I understand what to avoid by looking at bearish power gauge rating, bearish or weak performance, weak money flow. All those things tell me, hey, stay away. So now we're going to take this and we're going to talk a little bit about how it relates to covered calls and income strategies. As I said earlier, I think covered calls are great. You can generate consistent monthly income from them. You can use it to leverage existing assets. A lot like the way if you have a rental property, you want the property to go up, but you want to be able to take in that monthly rent as well. So think about your stocks appreciating in price and giving you rental income all at the same time. That's a covered call strategy and can help you lock in preferred prices. Okay, so these are some of the great benefits to covered calls. This is why I can't think of a single person that shouldn't be doing these. I think everybody should be doing covered calls in long-term portfolios. So here's my smart guide for covered calls. These are my guidelines that I use. These are my guidelines that I use to determine if a covered call is something that I'm interested in. I want to see a raw return of at least 1%. I like an annualized return of 12%, and I want a probability of that call expiring worthless around 65%. So feel free to write these down. Please write them down. I think they'll be helpful for you if you write them down. This is a conservative way to go about generating some income. Now that you know the rules, let's apply some of the rules. So the first thing that we're going to look at to apply the rules is, and I'm going to bring Marc back in here actually, because he came up with two great buy right examples. So Marc, you want to go through these?
Yes, let me just explain what a buy right is so we're all clear. A buy right strategy means you take cash in your account, you buy the stock, we'll just use 100 shares as an example, and then you write a call option. You're giving someone the right to buy your stock from you at a set price for a set period of time. So what I like to do is to screen for stocks that have a bullish power gauge rating in bullish industry groups where the other two factors that Josh pointed out, Chaikin money flow and Chaikin relative strength, are strong. So here, one of the screens that I use, uncovered Valero Energy. It's been a very strong stock. They're an oil refiner. They also are an oil retailer. And what we're going to suggest here as the buy right strategy for this bullish stock is to buy the stock. Yesterday when we pulled the slides, it was trading at about 66.25. I think it's there now. And then notice at the top of this screen on this 1-year chart from Chaikin Analytics with the power gauge rating on the bottom and then the technical indicators stacked above them, that we've got a little options button. We've integrated a module called Options Play. Now, why didn't we build an options idea module ourselves? Because when I first saw Options Play a year and a half ago, I said, if I were going to build an options idea generating module, this is what I would build. So to get this to our subscribers quickly, we licensed it from Options Play. Other people who've licensed this module are Merrill Edge, the discount brokerage firm, Raymond James, very fine regional brokerage firm, Ameriprise Financial, Jim Cramer, Oppenheimer. So subsequent to us licensing it, other people have seen the value of Options Play. So once I've identified Valero as a stock I want to buy, I'm going to go to Options Play and look for a covered call writing strategy. So in this case, Options Play is suggesting that if you buy 100 shares of the stock at 66.26 and you sell one April 70 call option with an expiration on April 21st, you're going to generate $100 in premium income, which is a 1.54% raw return. Now, Valero has a very nice dividend. As you can see, they have a 4.2% dividend yield. So not only are you generating income from writing the covered call out of the money, so you still have upside potential in the stock, but you're also picking up dividend income. So in this scenario, on April 21st, if Valero is under 70, and when we go back to the chart, we see that its recent high was 70, and that's where our upper volatility band is, which tends to define intermediate term price movement. If Valero is below 70 on April 21st, the call option expires worthless, you pocket the $100, and you still own the stock. If the stock goes up, it can be called away from you if it's above 70. And while you might call that a worst case scenario, I think it's a very good scenario. Why? Because you're buying the stock at 66. You're going to get a dividend. You've pocketed $100 of premium. So you're selling it at 71 plus the dividend. It's about an 8% return in 2 months on an income strategy. So I think it's a great strategy. And my screening unearthed a second good buy right strategy. This is a stock called WestRock. It's in the paper group. The paper group is also strong. So we're looking for everything to be lined up in our favor. We want the power gauge rating on the bottom of the chart to be bullish. That means it's green, which it is. We want the stock to be outperforming the market in a strong industry group. In this case, because the stock has recently gotten oversold, we have a little bit of negative money flow. That's not significant because there'd been a big buildup prior to that. But notice the green triangle. 6 pairs of buy and sell signals within Chaikin help the timing that Josh is talking about. So we just had an oversold buy signal. The stock is trading at around 53 and change. The suggested strategy here is to buy the stock at 53.18, go into options play, where the suggested call to write is the April 55 call that expires also on April 21st. You take in a premium of $1.30. Now, WestRock doesn't yield as much as Valero, but it still yields a very rich 2.97%. By writing that 55 covered call, taking in $130 of premium for every 100 shares that you buy, you're creating a raw return of 2.45%. You're almost equaling the annual dividend with a 2-month buy right strategy. That annualizes out just on the options alone to 15.41%. And again, if the stock is below 55 at the April 21st expiration, the option expires worthless. You can repeat the strategy over again. If the stock moves above 55, and again, let's go back to the chart and notice that the recent high was about 55 change. If it goes above 55, you can let the stock get called away. In essence, you're selling it at 55 plus the options premium of $1.30. So 50, you're buying it at 53, so that's a 6% return if the stock goes up in just 2 months. So these are just 2 examples of what we call covered call rating. I know many of you are familiar with them. If you aren't familiar with covered call rating, then
Hey, Mark, sorry, you were breaking
Hi,
up for a second there. Can you just repeat the last couple sentences real quick?
Yeah, if you're familiar with covered call writing strategies, fine, you understand what we're doing here. If you're not familiar with covered call writing strategies, type a question into the question box and one of our people will get back to you and we'll try and give you a little bit of educational material on covered call writing strategies. So I'm going to turn it back to the reason.
All right. Thank you, Mark. Yes, we've got a whole team here that can help answer questions that you have. I'm going to touch on that a little bit more. I have a couple examples that I'd like to show you as well. It was really great working with Mark going over and finding these examples. There's the WestRock one that he was talking about. I found an example on Facebook. So you see there's a buy signal on Facebook. Again, we've got a bullish power gauge rating. We're showing some relative strength, some strong money flow in the stock. We have a buy signal coming back around 130. So if you pick this up on that buy signal around 130, you could turn around, and I went into options play, and I found the 135 call for March. It's 22 days away. So in less than a month, what you would stand to do is take in a return of 1.79%. Now, Facebook doesn't have a yield, but 1.79% in 3 weeks is pretty good. It annualizes to almost 30% a year. Also, this would, if you got in 130, you'd have that upside potential. Now, if it doesn't, then you get to keep the shares, and you can just rinse and repeat and do this strategy again next month. And that's how you can consistently generate returns, by doing the strategy that Mark talked about with the buy right, or if you already own shares in a company, then you can turn around and just write covered calls against them. I use the signals that I talked about to help me time those covered calls, and Options Play helps me hone in on exactly where I want to be to optimize those strikes. You would take in $200 on this in 22 days. I think that's pretty good. I had found another one, Amerisource Bergen, ABC. If you had gotten into this stock when it started showing good relative strength, you see it's bullish down there for a while. It's been running up for a little bit of time here. You have good relative strength. Again, strong money flow. If you were in this stock, I turned around and I looked at the options and I found the 95. If you got into this between 85 and 90, turn around, sell the March 31, that's about 5 weeks out. So in 5 weeks, you would pull in a raw return of 1.37%. Amerisource, it does have a yield. It's 1.6, but again, you're almost matching the annual yield through a dividend in a covered call. I know a lot of people, I talk to a lot of people, I know a lot of people that use dividends to help them generate their income. One of the things that covered calls can do is help you generate incomes just like those dividends, but quicker and more repeatable, and with more control and more suited to you and what you're trying to achieve. So I thought that this was a pretty good covered call idea for ABC, Amerisource Bergen. All right.
Josh, can I jump in here for a second, please?
Absolutely.
I just want to point out that everything on this webinar is for educational purposes only. Chaikin is not registered with any state or federal agency, so these aren't recommendations, they're ideas, and you should consider them with your advisor, or if you're a self-directed investor, do your own research. So these are not recommendations, they're just educational ideas to illustrate the potential in options strategies that generate income.
Thank you, Mark. Yes, that's very true. So thank you for chiming in with that. These are ideas. They're ideas that we came up with that we thought would highlight for you some of the benefits of using covered calls. If this does, one other thing I wanted to mention about Amerisource is if it does get called away from you, you just got paid to take a profit. So I want you to think about that. And I don't know how many other places in life where someone will pay you to make you money. They will pay you to buy something from you at a higher price. And that's what a covered call is. You're getting paid to potentially sell shares locked in at a higher price. And if not, then you get to keep that income. And again, rinse and repeat. Just do it again next month. So in 37 days, I could just turn around and do this again and pull in another yield. So with that, what I want to talk about options play for a second. I know Mark touched on it. This is some images off of the options play. It helps you compare some strategies, helps you identify some of the likely price moves, helps you identify some targets, helps you identify your risk and reward very quickly and easily, helps you optimize strikes and expirations. It's a very helpful tool. I'm glad that we have it. So what I'd like to do next is find one live for you. I want to walk you through quickly what I do every week, my process, right? I told you I have a repeatable process. We find stocks, we look for the right characteristics to find them. Once we generate that list, then we turn around and we look through the stocks. I go through my strategy checklist. Once I find a couple that are what I think are the best opportunities suitable for me, for what I'm trying to achieve at my age and my capital, I do this some in a self-directed IRA. So if there are others of you out there that are doing this in a self-directed IRA, that's a place where you can do these strategies. So let's, what I'm going to do is I'm going to pull up Chaikin Analytics now, and I'm going to walk you through how I go about this. So let me share the platform. So we're going to go on the platform. Now, the platform is powerful. It's got a lot of tools on it. We have, for all of our subscribers, we have a daily onboard session. It helps everybody walk through the platform, learn where all of the buttons are. There's my buddy Joe. There we go. Learn where all the buttons are and how to use it. That's every day. We record them as well. So we call it an onboard session. We record them as well, so you can look at recordings too. So what you're looking at right now is the screener on Chaikin Analytics. I'm going to pull up. I have a screen preloaded. I'm going to pull it up. All right, I'm looking for stocks that are bullishly rated in strong industries and have the money flow and the relative strength that I'm looking for. And so these are the characteristics that I'm looking for. I'm going to click screen, and boom, a nice easy list to look through. So I'm going to click on results here, and it's going to take that list and it's going to populate it for me on my workspace. So it's pulling up the list. There you go. I have other lists on the side there. We have some set lists. I have some lists you can see of my own that are there. So, but we pulled up a list. This is from my buy right, my covered call screen, and it generates a nice, easy list. Now, I have a checklist. So I went through, just before this webinar, I went through these stocks. It didn't take me very long because I have a repeatable strategy. I know exactly what I'm looking for. So it saves me a lot of time. I get a quick list distilled for me, and then I already know what I'm looking for. So I just go through them. As I went through them, I saw LRCX, Lamb Research. So I pulled up Lamb Research. It meets all the criteria. Great persistent bullish power gauge, relative strength. It's just coming off oversold on our overbought oversold indicator. Strong Chaikin money flow, nice upward trend, and we're in a strong industry. So if you were able to catch this today, it got below 117. If you own this at 117 or lower, then what you could do is go into options play. I'm going to pull up options play here. And I'm going to click on the income button. And that takes me over to the income strategies. And it asks me a simple question. Do I own shares of LRCX? Yes, I own 100 of them. I always do this on 100. Even if I own 200, I always do my analysis on 100. You can come up with the way that you'd like to go about it. I find that that's easiest for me to do. I looked at this. I said, okay, let's modify it quickly. I told you can quickly go through and optimize your strikes and your expirations. The April 130. Okay, let's see what the 125 gives me by the mid price. $1.70. $1.70. So if you were able to pick this up around 117, or if you own it previously, or today as a buy right opportunity, picking up at 117, turning around and selling the April 21st 125 covered call would have got you a raw return of 1.44%. You're doubling the yield, the annual yield on this stock in 2 months. Think about doing this 6 times a year. All right. If it does get called away from you at 125, then you've just made 8 points off of this. You just got paid to make $8 of profit. How does that sound to everybody? I think it sounds great. I like it. So this is one of the ideas that I came up with today. You can see how quickly and easy it is for me to put in my screen, get my results, go through the characteristics, pop up options play, hone in on exactly what I think is suitable for me, and I'm off and running. All right, that sounds good for me. If that's something that you can see yourself doing or you think would be good for you, please type in, let us know. We like hearing from you. If you have any questions also, please type in and let us know. We'll try to get to as many as we can. Now I'm going to go back to my other screen here. And I'm just going to remind you just one more time, because it's important. My rules for trading, investing, whether it's nice conservative covered call income strategies or something more aggressive speculative debit strategies, you gotta have a repeatable process, a nice, easy, repeatable process that you can go through. A repeatable process helps keep you consistent. It helps keeps you disciplined, and it's how you can generate consistent returns by having a nice, repeatable process. You have to have a directional edge in that strategy. must have a directional edge. I get my directional edge, as I said, from the power gauge. It's reliable, it's objective. I really like it. It's very helpful for me in my directional edge. Then I want to identify my entries and exits. Where am I going to get in and where am I going to get out? So if it gets to this price, I'm in. If it gets to this price, I am out. Right? Nice, set, pre-done. So that way, when it gets to that price, I'm not making those emotional decisions in the moment. I already know the decision that I'm going to make because it's in my clear, repeatable strategy. And know what to buy. You got to know what to buy. You got to be able to identify good opportunities. So I do that by going through the screener, identifying the characteristics that I would like, and go through my strategy checklist. Now, how do we find the best option strategy for you? Well, that requires the right system, and that requires having the right tools. Chaikin Analytics is a proven stock selection system. Okay, Marc talked about it earlier. It's designed to help you identify good bullish or bearish opportunities the same way that the pros on Wall Street do it. What Marc has done is he's distilled this for you so it's easy to use. John Mindlin, Mindlin Economics. He's known as a macroeconomic guru. He has over 1 million subscribers to his weekly newsletter. He and his team use Chaikin Analytics for their due diligence. Again, it's a 20-factor model. We didn't really talk about this today, but it has this powerful stock discovery engine. It's unique. I've never seen anything else like it. It's easy to use and it helps you find ideas quickly and easily. A lot like the screener I showed you. You plug some things in and boom, there's some opportunities that are suitable for what you're looking for. And that's how you can get a better night's sleep. This is from one of our subscribers, Jim. Jim doing, again, nice, easy, conservative covered call strategies, income strategies to help him bring in a consistent return. It gives him confidence. When you have confidence because you have a system that works and is repeatable, you're going to stick to it and you're not going to hem and haw and guess and shoot from the hip. You're going to have confidence. My guess is a number of people have struggled with that confidence issue before. You can have the confidence to do it. I know you can. I've worked with plenty of people to help get them that confidence. Here's one from Torsten. Now Torsten's doing a little more aggressive debit strategies here, but we have a way to help you with that. So for some of our more experienced options people out there, I know that we really focus today on cover calls, identifying ideas for cover calls, how I go about that. We do have ways to help you with some more aggressive debit strategies if that's something that you're interested in or you find suitable for yourself. In addition, we have intraday charts. We have earnings alerts. We have a newsletter you get from Marc weekly and every morning from John Schlitz, Chief Market Strategist. He and Marc work closely together. These are great. I read them religiously. Every morning I get the newsletter from John Schlitz. I read it. Every Sunday night I get Marc's newsletter. I read it. Very helpful for me. I think it'd be a great benefit for you as well. Tonight, not 1950, 1650 for 12 months of Chaikin Analytics. So you can get started with us for 12 months, Chaikin Analytics, all the tools that I went over tonight, 1650. As a Chaikin subscriber, we have small group tutorials to help you set up and use all the features. We went through some of the stuff on the platform. As I said earlier, onboard sessions done every day. We can get you into an onboard session. You could be in an onboard session tomorrow. We can get you a recording of the onboard session tomorrow morning, and you can be off and running and learning how to use all of the tools on Chaikin Analytics. My colleague Joe does some great weekly subscriber sessions as well. We do an option session every week. Every week you can sit with my colleague Joe and talk over different ideas that you're looking at, going over some best practices. We have unlimited coaching and support. One of the ways that I really got great at this is because I had great coaches. And the same with my basketball, with my shooting. I'm 6'5". I was a terrible jump shooter until I got good coaching. So I got some good coaching. Off we go, and you get to work directly with the team. We have a whole team here. I work in the client success department. There's a reason we call it the client success department. We have a team that's dedicated to your success. So you get to work with them and me. You could be in an onboard session tomorrow. We could be doing a coaching call next week. You could be set up and running. So 2 ways to save $300 now. Subscribe at chaikinanalytics.com/Josh, or you can call us 877-9-STOCKS. I hope that everybody enjoyed their time with me today. I had a lot of fun going through my covered calls, rules and guidelines, and talking to you about some of the great examples and ideas that Mark and I found. So again, 2 ways to save $300 now. You can subscribe at chaikinanalytics.com/Josh, or you can call us at 877-9-STOCKS. I appreciate everybody's time. Thank you very much.
All right, Josh, we want to thank you so much for your time, Josh and Mark, for this presentation. I'm going to go ahead and pull up a quick screen here. Just as Josh mentioned, you can go to chaikinanalytics.com/Josh, and you will see an access page just as you see here right now. chaikinanalytics.com/Josh, $300 off for attending today's webinar. Or of course, you can dial us directly at 877-697-6783. I'd be more than happy to get you in. We do have one more onboard session, just as Josh mentioned. This is for bringing everybody up to speed. We saw a lot of really good questions throughout the session today, including, how do I generate a list just like Josh did? What kind of criteria did he put into the screener? How did he navigate through options play? We cover all of this content live every afternoon during these onboard sessions. And we have one more this week. It'll be tomorrow at 2 o'clock Eastern time. We'd love to have you join us. Hey everyone, if you're still able to hear us, we just had a little bit of an internet outage, but we were just about at the end of the webinar anyways. Just as a quick reminder, you can access a recording of today's webinar. We're going to email this out to everybody. But as one final reminder, again, chaikinanalytics.com/Josh. You can check us out at 877-697-6783. And again, we'll get you in for the onboard session. So as a formal ending to today's webinar, have a wonderful evening. Thanks for joining us, and we will see you tomorrow.